Welcome everyone to this video that is about a sector that I'm watching carefully, but not in yet, at least. So this video is going to be my thoughts on deep sea exploration stocks. I've had half of this set up for a while, but upon a request, I decided I'd finish it and input my thoughts now. So let's get into it. So this video is just going to have my quick comments on these 7 topics that I feel will influence the price of deep sea, rig exploration companies pretty heavily. So firstly, I think the biggest factor for these stocks, well, at least long term, is going to be the oil price. Now, these stocks are heavily dependent on a higher oil price because with lower oil price, at least for now with current technology levels, there's no real point in spending the money to search offshore for oil. There's at present capacity plenty online, and so these stocks are really optionality plays on much higher oil prices. And I just wanted to point out that even though oil prices are down recently, they're still at a level where most current producers are still making a profit. So secondly, on the oil price side, is recently in response to a falling oil price, OPEC decided that they were going to cut production in order to help stabilize the price. Now, this is fine for the price of oil, but it is not necessarily at all helpful for uh, oil, for deep sea exploration because they require a much higher price to be useful. Now, what this also means is that if the prices go back up, OPEC can reinstate their production and again suppress the price getting to a level where these companies would need in order to really make a profit. Now, lastly, on the price of oil. In my opinion, the recent decline represents a change in the market sentiment where the market went from adequately supplied to oversupplied. Whether that's due to production growth or whatever, um, I personally think it's due to, or the decline is due to the decreased demand growth expectations due to decreased global growth. Now, if that concern is valid, then even with OPEC's cut, we could see 40s or lower on oil, which again makes these stocks very unprofitable. Now, on the rig side, there's definitely only minimal growth because it's not really profitable to own rigs right now and to operate them and to, well, basically pay to use them. But on the flip side, between 24 and 39%, depending on the metric, depending on what type of rig you're looking for, um, there's that's unused capacity, which means that if the price of exploration, price of using the rigs goes up, there's still a lot of current capacity that's idle right now, which again would slow the increase of price. Now, I think it's also important to look at why one might like buying a rig stock at these current prices. And that's because they're trading at a very large discount to their book value. If you wanted to buy rigs, you would be paying much more than buying rig stocks. Now, looking at these things and being like, oh, okay, well, that could triple to get to book value, that seems enticing. But on the other hand, most of these companies still have billions of dollars in debt. Now, while some of the debt has been wiped out, many names still have billions, up to, I've seen $5 billion in debt on some. If you couple that with having lower revenue, or little revenue, I suppose is a better word, then they have expenses. Their earnings before interest, taxes, depreciation, amortization is very uninspiring. And if you just take the interest expense on all that debt, that seems to me like a recipe to lose a lot of money between now and the time the market turns. So looking at a value proposition of some of these companies, some could triple, quadruple, or more to get to book value. But in the meantime, at current oil prices or even at slightly higher oil prices, these things are going to be losing a lot of money. Now, I think it's likely that someday these things will be profitable because I think that in the future, not too distant, but not imminent, um, oil will need to be explored for offshore. And at that time, these things could be quite profitable. Now, when will that be? That's the question. And the other questions that I am forced to ask myself when I think about these things is, how far away is someday? Is it close enough to be worth the chance? I don't know. How long to get past this OPEC overhang? Will there be a recession between now and then? Which leads me to the most important question of, how much might I lose between now and the someday? Now, my conclusion to this question is, while I do think the turn could and likely will be quite vicious and highly profitable potential reward at that point, at these prices, with this oil price, with this spare capacity, with this global growth slowing, with all of that, with some other market factors, I think that we'll be given a better buying opportunity. I don't know when that will be, but I just don't love it at this point yet. I think it's possible it will get to a point where it will be cheaper. I don't know. It's so cheap. Basically, I really want to get behind it, but it, it just, I just kind of see the potential for some of these names to just get completely wiped out in terms of refinancing their debt, issuing shares, all that again. And for that reason, I am not yet in the space. So that's it on my brief recap of the deep sea oil exploration sector that I see right now. Let me know if you think I'm missing something, or if you agree, if you disagree. I want to know why, more importantly than if you do, why. Um, if you want to see more either bull case, bear case on the sector, let me know. It's something I'm looking at right now. So yeah, that's it. Have a great day.